the Moneyweb Crypto Podcast, where we discuss all things crypto related. Your host, Kieran Ryan.
One of the more interesting developments in the financial markets over the last year has been tokenized assets. In other words, the ability to purchase cryptos backed by real-world assets such as property, bond, and stablecoins. Last year, we spoke to Connie Bloom of Mesh Trade, which is a pioneer in this space in South Africa and around the world, and a lot has happened since then. For example, you can buy a tiny fraction of the Satrix RAFI 40 EFT, that's an exchange-traded fund, or you can buy a South African bond ETF, the Satrix MSCI Emerging Markets ETF, the Satrix S&P 500 ETF, just to name a few. You can also buy a Euro stablecoin called EURC as a hedge against Rand volatility, and without having to use your single discretionary allowance. Tokenized assets are taking off in a big way. They allow anybody to own fractions of a property, Bitcoin, gold, you name it. This is all built on the blockchain and will allow previously illiquid assets, such as property, to gain access to a vastly larger potential market. So we're joined once again by Connie Bloom, co-founder and MD of Mesh Trade, to see what's new in the world of tokenized assets. Hi, Connie. Good to talk to you again. I see a lot of new instruments now listed on Mesh Trade. 9 months ago, it was a much smaller offering. So take us through what's happened in that time.
The last 9 months have been 9 months of growth for Mesh, but not just for Mesh. As you mentioned, the real-world assets universe has basically exploded. I refer here to something that Larry Fink, the CEO of BlackRock, said. He said the next generation for markets, the next generation for securities is all on tokens. And that's absolutely what we're seeing. So not only for Mesh, but the entire industry as a whole, this has been gaining momentum. Now, within our world specifically, and we very much focus on South African, European kind of flows, we're seeing more and more people actually coming to the plate wanting to either tokenize their assets or raise capital via tokenization as well. And this has been fantastic momentum for us. It may seem like it's such a short space and time that this has actually started taking foot, but we've been in this space for more than 5 years, and I welcome that we are at last seeing that momentum entering into the financial markets in broad scopes.
Okay, so for people who don't know, not familiar, explain what is a tokenized assets, why are you and others like Larry Fink so excited about this, and how it's transforming the world of finance?
Tokenized assets, I think, has a bit of a bad rep. So there is a common theme in the market that people think that a tokenized asset is only a cryptocurrency such as Bitcoin. It's also Bitcoin. It's also cryptocurrencies. So in its core, in its foundation, a token is a unit of value that's transacted on a blockchain. And to make that more realistic, like what is this thing? What is this unit of value that I'm trading? It can be anything. Like you mentioned, it can be a bond. It can be an ounce of gold. It can be a house. It can be a painting. Anything that you can unitize, you can then trade and settle by the blockchain technology. And that is called a token.
All right. Now, Mesh has been issued with a crypto asset service provider license by the FSCA, the Financial Sector Conduct Authority. And last year, you launched your DMOS. That was a 100 million Rand bond, which is a 10-year bond, with a 2% plus floating rate. Tell us how that went. And also, you now have a secondary market for that bond and how that's going.
I think the DMOS bond was a great success. So on primary markets, so that's when this asset was first launched out into the market, we already had something happening on that asset that was unheard of in the capital markets. So we raised 70% of the 100 million from retail investors. Now, in many of the more formal sides of the markets, retail investors are actually excluded from most of these kind of transactions, saying that they firstly don't know what they're trading, which is fundamentally untrue, but also secondly that it's not affordable, it's not easy. You can't actually bring in mass investors into the market. By putting out this bond into the market in this way, Mesh actually proved that it was possible. That we can have a broad base of investor types investing on the same instruments at the same time via our platform and our technology that we've put in place with Mesh. So I mentioned 70% of that was via retail clients and the rest was taken up by small to medium enterprises, corporates and institutional kind of investors that you would normally see. Now, post-issuance, post that primary market, we're also seeing something that is incredible to witness. Because the moment that you start putting retail clients into the core of the capital market, the heart of the heart, the place where all the action actually happens, something incredible happens. That something incredible is called liquidity. And what we're seeing currently on that asset is an 8% per annum secondary market volume. And just to put that into perspective of what you see in the more formal market is if you see 2% to 4% of secondary market activity across the entire life cycle of this asset. So across that full 10 years, 2 to 4%, that is actually massive. And now we're seeing 8% per annum, and it's just gaining momentum. We're seeing that increase month on month, that there's just more and more people actively trading that asset. And this is the biggest proof point that I can give to the market to say it's working. It's been done in a regulated fashion. It's done in a way that everyone can see what the risks are. Plus, it's done on a next generation platform. So therefore, more of these assets should come out into the market, and we should be looking at bringing in a retail component to every one of these assets. Retail clients can invest right alongside the big boys as well.
Very interesting. 8% liquidity per year. I had no idea that it was that strong. Give us a sense of the people who are actually trading. How many of these would be institutional? How many of them would be like family offices or just ordinary people on the street?
I think the most active component that we're seeing is the ordinary people on the street. So currently, this assets does not trade on a fractional basis yet. We are going to be opening that up to fractionalization even further. But the minimum amount that you can actually trade on these assets is around 4,800 to 5,000, depending on the price on that given day. But that means that it's normal retail clients actually stepping into this space. If that asset gets fractionalized even further, which is completely possible in the world of tokenization, we will see an increase in the secondary market liquidity as well. But we're seeing a really nice spread between retail, SME, corporate, and institutional all trading actively. So one of the biggest traders in this market is actually the underwriter who's systematically just selling off their position, and the retail clients just taking more and more of that position as well. So both sides of the market is represented in this space, and it's quite equally balanced as well. It is very surprising for me to see that the retail clients is actually a lot more stronger in the secondary market than what I anticipated as well.
I want to come back to this thing about liquidity in the secondary market, but before we get there, in August last year, you launched, this was another capital raise, a 30 million rand capital raise for a South African reverse mortgage provider called Water Financial. I thought that was a water provider, but apparently it's not. I looked it up. This is quite stunning since it's completely outside the traditional financial space. First of all, maybe just explain what is a reverse mortgage, and does this capital raise open new opportunities to raise capital for all sorts of frozen or illiquid assets? And what kind of assets would you be looking at?
It's a beautiful question. So starting out with what is a reverse mortgage? A reverse mortgage is something that the more formalized markets use a lot more than what South Africa is using. So this is something that occurs very much in the UK and the US. So what this actually means is you're sitting with this massive asset, which is generally your home. And a lot of people tongue-in-cheek say that as long as you live in your house, it's not an asset. Well, a reverse mortgage actually gives you the opportunity to turn that into an asset by saying that if you want to access the equity that you have in your house, that value that you have in your house, you can go into a reverse mortgage. It's like taking a loan against it, and it gets paid out to you. But in return, you're effectively selling off your house to the person providing you with that reverse mortgage. So they acquire more and more of your house, and you acquire more and more of the cash while living in your house. And this is such a fantastic marriage to tokenization, because we're taking previously illiquid or previously frozen assets and we're making it more liquid. We're making it accessible. And this is something that some people sometimes term as the Uberization of the market. Imagine where you put your car out to field to earn yourself some income. I think that is a really good example of a use case for tokenization. Not necessarily tokenizing the actual physical property, which we're seeing a lot of people do. I still think that use case is flawed to a certain extent. But if you go and you look at more frozen or illiquid assets that are being tokenized, I will bring up an example of something that we are actively currently looking at and that we will be launching into the market from mid-February. And this is actually your Kruger Rands. How many of us do have Kruger Rands somewhere in a sock drawer, hopefully not collecting dust, being protected a bit more than just being thrown around in your house? But it's an asset that many South Africans are very attracted to because it's one of the purest forms of asset that we can invest in. Being South Africans, we're all very proud of being part of a gold mining nation, and we should be. But now your Kruger Rand is just collecting dust, but you can't really do anything with it. You can't buy incrementally more of it. You can't sell increments offer from it. You need to go to a place and you actually have to physically transport your gold to a location. Now, what we're doing with this is we're tokenizing those Kruger Rands and we're putting them out into the market so you can buy fractional components of it and you can build yourself up to a full Kruger Rand. You can you can redeem it, so you can take ownership of that asset, put it back into your sock drawer if you want to, or you can just use it as an investment and build up your Kruger Rand allocation. And remember, Kruger Rand is a gold bullion, so it is a legitimate form of gold storage. I'm really excited about that asset. Some other things that I'm seeing that is very interesting as well, which are realistic, they're going out to market right now, we're raising capital for them, is we have a very prominent private credit provider in the market. In the form of 274, he is an industry legend called Moneyweb. We are raising capital for one of his big projects that are coming up later on in the year, I would say around May. We're raising capital for one of his private credit funds. And we'll be keeping on doing more of that. And then those funds are going to be invested into some very lovely combination retail and office locations as well. These are but like a subset of the possibilities of previously illiquid assets that we now have access to. And I'm excited to see that the world is no longer just coming forth with examples that are slightly far-reaching and a bit unpalatable, to be honest, but actually coming forth with things that have real value and real investment value right now for the market. We call this space the private capital space or the alternative finance space. And if you look at specifically Africa, and I think growth is a very topical item on the South African agenda, is this space, this part of the financial markets, this part of the capital markets is actually one of the fastest growing components in our current economy, where you will see the more formalized markets are shrinking. And why is that? Why is that when we have more capital flows into South Africa than ever before, are we not seeing our formalized markets actually growing with it? Well, the answer is quite simple. It's because the alternative and private capital markets are providing more opportunities. And I would wager to say that tokenization is the future of this component of the market. If you're not in this game, you're missing out.
Explain that a little bit more, private capital. What are we talking about there? You mentioned Moneyweb, and he's got some projects which are going to go into office and retail space. Is this an alternative to bank financing, which would be the traditional approach? And could we see small businesses or smaller business or medium-sized businesses approaching somebody like Mesh Trade, yourselves, to say, hey, we need capital expansion. We're getting no joy from the banks. Can you help us? How would you respond to that?
Absolutely. So firstly providing some clarity around what is the definition of private capital. Private capital is to what you put anything that trades off exchange. So that means that if you're not listing your company on something like the Johannesburg Stock Exchange or the Cape Town Stock Exchange, that is seen as the formalized market. But private capital, private credit is anything that's basically sub to that. And I don't mean sub by size, because some of the transactions that occur through the private credit or private capital market is a lot bigger than anything that we see in the formalized market. Traditionally, in this field, you will see things like hedge funds, private equity funds, venture capitalist funds, private credit funds, like I just mentioned, and anything that's sub-bank. Very good quality assets, very high growth, but a bit more personalized. So you get to meet the people that invest in you. You get to choose how you transact with them. And absolutely, this is why we set up Mesh. We saw this growth and we saw this part of the market being excluded from the formalized market, because South Africa needs this part of the market to grow. We need our small to medium enterprises. We need our entrepreneurs to have access to good quality capital to actually bring forth and deliver on all the big promises and projects that they are building out. I was reading a very interesting article over the weekend. It was a bit of a sizing up that we're currently seeing. We all are hearing the Trump noises happening and everyone responding to them. And someone made a very well, I would say, staffed point by saying that America has grown many unicorns in the last 20 years. We can count them. We can all see them coming up, and we would all love to invest in those companies. How many has Europe actually delivered in the same amount of time? And I would also wager how many has South Africa and Africa delivered in that time. I'm thinking about Time Bank, which is one of our homegrown companies who's just reached unicorn status.
Unicorn status being $1 billion or R1 billion?
A $1 billion company. So Time Bank is one of our $1 billion companies that was homegrown, but they obviously needed to expand across Asia and a couple of other countries to achieve this. But we need to look at ourselves and we need to look at our economy and say, are we putting in place the mechanisms to encourage this kind of growth happening in our country and in our continent? And the answer to that is quite simply, yes, you need capital flow in, but if you don't have a mechanism to handle this amount of capital, you're failing at the go. And this is why Mesh is so important for this country, and this is why tokenization is so important for this country, to give a trustworthy way for private credit and private capital to flow into this economy, flow into entrepreneurs, so we can see that growth happening from the ground up.
Yeah, I'm not sure if you've seen, I think over the weekend, Donald Trump tweeted out something very specifically about South Africa, and it was not very complimentary, and it sounds like we're going to be in trouble with tariffs and all sorts of other things. I just want to come back to this point about the Krugerrands, because my attention's stuck on that. How do you secure the back end of that? In other words, you've got somebody who's got a physical Krugerrand, and you're offering a way to digitize that. So who's taking custody of that? And if you're buying a fraction of that, how do you prove that? I mean, there are some technical issues there. Maybe just address that.
Yeah, well, let's dive into the mechanism of this. So what we've done is we partnered with a company called Troy Gold. They're already out in the South African market, and they're an authorized gold dealer. So many people already hold some of their products, but they have all the infrastructure set up to vault and transport and handle this very precious metal that we're dealing with. So the physical gold gets vaulted with RMB. It gets audited as well. So at all times you have the assurance that whatever you buy, you can verify that it's actually in the vault. And let's talk about that verification as well, because we see a lot of people saying, but it's verified. What does true verification actually mean for a physical asset such as a commodity? It means that someone needs to go into that vault and have eyes on the asset and sign off on it to say that we've counted it and we've seen the vault, we've seen the assets, and we can verify that the amount of assets that you've put out into the market counts up with the amount of assets that are vaulted as well. And this is something that Troy Gold and RMB provides to their clients. So when you tokenize it and when you put it out to this market, it always needs to have that surety that it is vaulted one-to-one. Then only can you trade it with relative confidence. Now, the next step to that is to say, but when I'm buying a token, I'm actually buying a contract. I'm buying some rights and obligations. I'm buying the right to buy gold that I just purchased, but I'm also buying the right to redeem it or to deposit it. And that is also something that is enabled through the Troy Gold infrastructure. Because the moment that you actually request to redeem it, they take it out of the vault, and through some verified transportation, they actually deliver it right to your home. Now, you obviously need to be aware of the risks of holding your own gold. But if you are comfortable with having a Kruger Rand in your sock drawer, you would be comfortable with actually taking delivery of it in this manner as well. And it's all trusted and verified by the bigger brands, the more known entities in the gold market as well. So this would be institutional grade security being put on your Kruger Rands as well.
Just very quickly, we are running out of time. Just tell us about the secondary market. If somebody wants to sell a token, you've already mentioned you've got quite deep liquidity on the DMOS bond. Some of these other bonds as well, the one that you've just done with Water Financial, what's the liquidity likely there? And are you seeing it grow over time?
So across all the assets that we have listed on Mesh, there is quite high liquidity. So the reason why we can have such high liquidity is that because we own the technology behind our platform, we can actually see what kind of market mechanism would treat every asset the best. Do we need market makers? Do we need an order book? Do we need a direct order mechanism? And each of these mechanisms, and may sound very technical, but all that it ensures is that each asset actually gets handled in the unique fashion that stimulates the most liquidity on them. Now, I'm foreseeing that as we put more and more assets in here and as we have a growing base of investors, we would just have deeper and deeper liquidity also occurring on all of them. And on average, within the Mesh universe, obviously the most one I mentioned was at 8%. That is obviously a beautiful asset. On the rest of them, I would also wager that we're around 7% on that secondary market listings as well. They're just trading, they're just doing their thing. So it's absolutely beautiful to see it happening. But obviously on all your cryptocurrencies that we also have listed, you see a lot higher liquidity because those things trade like currency. So the secondary market needs to be even deeper and more active than on more of your securitized kind of assets. And I'm very, very bullish on this because I would refer you to a event in the market quite recently, which was called the Boxer IPO. And Paul Miller reported on this IPO quite widely. And one of his biggest criticisms to this IPO was citing that why are we excluding the retail component in for a company that actually services the retail market almost exclusively, saying that if you exclude the retail market, you're not seeing an active secondary market, you're not seeing that wealth going into the rest of the market. And we encourage more and more people to come into the market and actually making their assets available in this fashion. So as we grow, I can just say that it will get better.
I think there's a threat here to the Johannesburg Stock Exchange. This is clearly where it's all going, tokenized assets. Unless the stock exchanges around the world start to tokenize and realize where this market is going to go and the number of options and variabilities that you have with the tokenized assets, they're going to miss out. What do you think?
You're asking a very pertinent question. And you have to go look at what is the reason for exchange to exist, and not hammering on the Johannesburg Stock Exchange at all. I'm talking in general around exchanges in the world. is not just the Johannesburg Stock Exchange that's seeing a decrease in listings. It's a global phenomenon that's happening. On the one side, you have to look at what does the technology enable. It brings forth the ability to have more people coming into the market. As an exchange, you should always be simulating more people to come into the exchange. In its core, an exchange of a country is a custodian of economic growth. You have a responsibility to stimulate it. You have to put in so much work to make sure that you can actually break down a lot of those barriers. But now that word barrier just came up. Are the exchanges doing enough to bring more people in? Are they doing enough to make it easier, lighter, more transparent, more efficient to actually deal on the stock exchange or on the exchange in general, where there's a stock and a bond exchange or commodity exchange? Are they doing enough? Because technology is only one part to the coin, one part of the puzzle. If you really want to stimulate growth, you will be putting in things in place, processes, procedures, lighter boards, lighter regulations to stimulate it. Because yes, a lot of the exchanges are hammering on being protecting of the market, protecting the stability of the market. But you can't protect the stability of a market if you don't have a market that is expanding. Because then you're just protecting a dying animal. So my challenge to all exchanges are, what are you doing to break down those barriers? Technology is but one part. But help us grow the economy. It's good as the space is more than open, more than big enough for us all to work in here together. So we are challenging the norm. I challenge them as well to do so.
Challenge accepted. We're going to leave it there. There was Connie Bloom, who is the founder and MD at Mesh.Trade. Thank you very much, Connie, for joining us on the Moneyweb Crypto Podcast.
Thank you.
Thanks for listening to the Moneyweb Crypto Podcast, hosted by Kieran Ryan. To listen to our other podcasts, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates.